Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm Michael Casey, filling in for Christine Lee all this week. Joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Hello to you both. So, first up, good morning, guys. Let's take a quick look at Bitcoin. The CoinDesk XBX Bitcoin price index, 34,408.38 cents, up 2.72% on the day. And the CoinDesk Ether price, ETX index, 2,330.50 cents. That's up 5.37% on the day. So, Emily, overnight, yet more China news. Tell us what's going on there.
Yes, it never ends. This is all part of the same narrative. The latest news is that Beijing apparently closed down a company that was providing software services for virtual currency transactions. This is all part of Beijing's larger crackdown that has accelerated over the past couple of months. We did see a short-term impact on price. I think the question is what effect this will have on the long term, or if Beijing will continue in this vein.
And it was short-term. I mean, there was no major sell-off. It just basically bounced off. There was a small rally up to 35,000 overnight, and then when all this came out, it went back down to roughly where it was before. So again, the market still wants to stay in this kind of tight $3,000 range where it is right now. It just keeps bouncing along, trying to find what its next move is. But it's looking at all these headlines, and after a while, it's just saying to us, okay, we get it. China's not too thrilled with crypto, but they're not exactly putting everybody in jail over it either.
Yeah, those markets are sort of given that dog days of summer feel to it, aren't they? So looking at today's top story, President Biden is promising a full investigation of yet another ransomware attack by the Russian-based group Revil. This time the hackers targeted a software company whose clients manage internet services for businesses worldwide. The supply chain attack has reportedly affected at least 200 US companies and over 1 million machines globally in what appears to be the largest ransomware attack ever. The hackers are now demanding $70 million in Bitcoin in exchange for a decryptor for the infected machines. Revil is the same group, you would remember, that recently attacked Colonial Pipeline and JBS, the US meat processing plant. Joining us now is Esteban Castaño, the CEO of TRM Labs, a blockchain intelligence firm that helps governments and financial institutions prevent fraud and financial crime. Welcome, Esteban.
Thank you so much for having me.
So, Esteban, the FBI managed to get the money back in the case of the Colonial Pipeline attack. This is, again, the very same outfit. What are law enforcement's chances of getting the funds back this time?
It really depends. In the dark side example, there were a lot of unique circumstances that made that operation successful. I think in this case, it'll depend in terms of how that attack was carried out, the surface area of that attack, which crypto the ransom is paid in, and other factors.
Just to zoom out on kind of a larger picture question has been gripping the crypto community. So on the one hand, you have sort of like law enforcement and sort of the no coiners out there saying things like, Bitcoin and crypto is terrible because it's so easy for criminals to use, right? And then you have the sort of crypto evangelists on the other side saying like, no, it's actually not true. It's totally traceable and it's actually bad for criminals. It's much easier for criminals to use cash. What's the reality here? Like, where does it fall along that spectrum? Like, is it actually a good tool for criminals, or is it something that makes it harder for criminals to commit crimes?
So, it's a little bit of both in the sense that you have this global money that is really efficient to send internationally, and that is accessible, and that there are easy on-ramps into it. And so on one hand, it's quite easy for ransomware operators to target victims, for instance, or other criminal groups to use it. On the other hand, it's all of the data is on a public ledger that folks like TRM can analyze, law enforcement can proactively analyze to detect and investigate financial crime. A blockchain-based financial system, from a proactive risk management perspective, is much safer than a world where transactions are by default much more difficult to analyze, which is the model that we have today.
So, Esteban, centralized exchanges, are they being helpful, these guys, as they try to liquidate their holdings? And are things going to get complicated as we see more and more decentralized exchanges becoming a bigger factor in the market?
Yeah, centralized exchanges are really helpful. They have KYC AML controls, and they help in two major ways. One is, monitor incoming deposits and prevent proceeds of financial crime like ransomware to be converted into fiat. And the other is that, they can help link on-chain activity to off-chain activity by virtue of doing KYC. And so if they're able to see that, hey, I've got XYZ deposit and it's linked with Y individual, and that deposit was associated with a ransomware attack, they can help be an important nexus for law enforcement to build cases. As crypto, as decentralized exchange technology takes off, one of the interesting things that we're seeing is that all DeFi leads back to centralized exchanges. So we see that there's trading and there's a lot of activity happening with decentralized exchanges, but ultimately there needs to be a cash out into fiat. And when that happens, that's where there's KYC, there's AML, and ultimately law enforcement is still able to get a nexus back into the off-chain world. One of the concerns that we hear sometimes is this idea that, well, what happens when the world is truly decentralized and all finance is happening in these DEXs and there isn't a cash out point? We don't see that, happening to that degree. I think that even in a world where you have a lot of decentralized exchanges and decentralized finance applications, there are still going to be bridges to the traditional financial world, where that's through a payment processor, through a credit card, or through some other vehicle that will ultimately link on-chain activity back to the traditional financial world.
It's about, notwithstanding all that, exchanges are still struggling to prove to regulators that they are compliant with regulations. We just saw the news again, China cracking down once again. Can you tell us a little bit about what TRM Labs does exactly to help them address that and show their compliance with regulators?
Sure. We are a blockchain intelligence firm. So we provide B2B software that helps financial institutions detect money laundering, fraud, and financial crime. And so, crypto businesses have the tools to talk to regulators and say, well, yes, this is a new financial system, but we have best-in-class tools to mitigate the associated financial crime risk. It's going to be a journey for the regulatory environment to adapt to crypto. It is a brand new financial system, and a lot of the assumptions that we had in the old financial system are different in this new financial system. And so, but like any new technology, we shouldn't approach it with a blanket a ban. We should look to understand it and look to mitigate the unique risks that are in it.
Great. So thank you, Esteban. That was Esteban Castaño of TRM Labs.
Thank you very much.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So one of the places where TRM Labs is working is India, where there's still uncertainty about crypto regulation. WazirX, India's largest exchange with more than 6.5 million users, is owned by Binance, which has come under regulatory scrutiny worldwide this past few weeks. Now WazirX has tapped TRM Labs to beef up its ability to detect and prevent illicit activity by users. Joining us to discuss is WazirX's founder and CEO, Nishal Shetty. Welcome, Nishal.
Hey, thanks a lot for having me here.
Thanks for being here. So officials in Japan, the UK, Canada, Cayman Islands, Singapore, they were all issuing warnings against Binance, or have said they're going to investigate concerns. Is your deal with TRM Labs in India motivated by that?
Not really. So we've been working for regulations in India from the last several years now. And we see this as an extension of that. In India, there are no regulations around crypto today. So what we are doing, a bunch of exchanges, is to self-regulate ourselves. And I think transaction monitoring is an important aspect of that self-regulation that you bring in order to help the law enforcement when needed. Until now, we've had a lot of internal tools that we were using, but now with TRM, we see this as another, I would say, a step forward towards helping law.
It appears that we may have lost Nishal there. Are you still with us, Nishal? So, guys, I mean, India's just been a scene of confusion in many respects about regulation for some time now. Do we feel as if it's moving forward in some way, or is it still sort of vague?
Lawrence, it's definitely a roller coaster. Yeah, it's very hard to know what's going on in India, and it's kind of a funny combination because you have this roller coaster regulatory environment and Binance, which is kind of a roller coaster of its own. So yeah, that's going to be. I think it's going to be an interesting.
It's like any democracy when you have some people who love crypto, some people who hate it, and everybody gets a voice in the parliaments. And eventually, you just can't. You see all these headlines of this bill proposed and that bill proposed. You know, if anybody outside of the United States looks at the U.S., they're looking at the likes of Representative Sherman. They're like, well, gee, these guys that really hate crypto in the U.S. And then on the other side, you see somebody like Cynthia Lummis, and you're like, they really love crypto. What is it? And it just has to do with, our perceptions of.
I think we're getting Nishal back, hopefully, here, Lawrence. Let's see if we get him back. There he is.
Great.
All right, welcome back, Nishal.
Sorry, some bad internet day today.
Okay, yeah, this is the workings of this global operation. So anyway, welcome back. You were talking to us a little bit about what was actually motivating this move in India.
Yeah. So we've been working on regulations from a few years now, and working closely with the law enforcement in the nation is really important. Our objective has always been, how do we help the local authorities in India? First is understand crypto and blockchain, and the second is to achieve their investigative goals. And bringing in an application like TRM just aids in that whole process. We've been using a lot of internal tools, but I think using TRM is going to help us further help enforcement in India, as well as ensure that no bad activities happen on our platform. If we can take a proactive approach, we've been taking a reactive approach before, but with this, our objective is, can we also take a proactive approach to preventing any sort of negative use cases or bad activities happening on the platform. So that's been one of the biggest reasons why we moved towards TRM right now.
Hi, Nishal, good seeing you again. Your backend is mostly Binance now, correct? I mean, you've switched over to their backend?
No. So we operate independently. We have a separate product, and everything is it's developed as a WazirX as a separate platform.
So there is no any order routing going to Binance at all?
No, not anything directly. So our order book is specific to India. It's the INR market, which is only available on WazirX. It's not even available on Binance. So it's a completely different order book.
So they don't. There's no liquidity issue. There wouldn't be any liquidity issue if you needed perhaps to separate yourself completely from Binance down the road.
No, not really, because in fact, WazirX has the highest liquidity for INR in India, and it's completely owned and run by WazirX as a platform.
And that was developed in-house, or was there any Binance development involved?
No, so we built it, and then we got acquired in 2019 by Binance, but it was all built in-house by us.
What is the overall sort of KYC situation in India? Because it seems that, Indian regulators, there's been a bit of a roller coaster with cryptocurrency, and it seems like they're worried about various things. Is one of their main concerns, the use of bad actors in crypto, and like generally looking across the landscape of Indian exchanges, like how well are they generally complying with KYC rules?
I think, look, there's no regulation right now for any exchange to implement KYC. But a bunch of exchanges, including WazirX, we've taken the route of self-regulation, which means ensuring that you implement KYC, AML policies, and everything around it. And we take the standard, your identity proof and your address proof. And we also ask our users to submit a selfie holding that identity card. So this is like the standard KYC that we do. The biggest concern in India of the regulators is one, definitely anonymous transaction, which gets eliminated the moment you do KYC. The second is, I think, more to do with, how do you trace all of these negative activities if in case they encounter any of these situations, which is where I think, using products like TRM Labs tools to trace the transactions that are happening, even out of the exchanges. Because the thing is, you can give transaction details within your exchange, but what happens to the crypto once it leaves the exchange? I think that is the aspect which is something more of a concern right now amongst the regulators.
CoinDesk recently reported that Coinbase is trying to woo recruits in India by offering them $1,000 worth of cryptocurrency. It seems like India obviously is a very hot market, and we're going to see more overseas exchanges coming in. Do you see Coinbase as becoming a real competitor in India?
I think right now they're focusing on the software development part, which is a good thing for the country because it helps develop the talent that you need in the crypto sector. But would they enter India right now, or would that take time? I'm not really sure, because the regulatory landscape in India is still very nascent right now. And there are quite a few challenges that you have to first go through in the country before you can really set up an exchange today. So I don't know what direction they're going, but I think the fact that they've set up a development center, that's overall great for the crypto ecosystem, because you're now going to see a lot more talent being developed in the country. And since Coinbase already has some prior experience, years of experience working in the sector, that experience is going to come to the local skills out here of the people. So I think net, it's a very good, I would say it's a very positive step for skill development in the country.
All right, Nishal, thank you very much for that. That was Nishal Shetty of Indian crypto exchange Wazir X. Coming up, checking in on Asia and our crypto markets update with Martin Gasper of Crosstower. Time now for the daily forecast. An update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the Daily Forecast, July 6, 2021. I'm Justin Solomon of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Coming up, IBC Group to end Bitcoin and Ethereum mining in China, Thailand's The Pavilions Hotel and Resorts Group to accept crypto, and have you got what it takes to become a crypto native? Now, let's get you up to speed from Asia to the world. In China, the crackdown on crypto mining continues to make waves. Since China's State Council declared its intention to manage financial risks by clamping down on crypto mining and trading in the country in May of this year, many big players have made the decision to relocate. The latest to make a move is IBC Group, which recently moved its headquarters to Toronto, Canada. The group, which employs over 1,500 staff, has decided to close down all of its Bitcoin and Ethereum mining operations in China. In a press release, the company's chairman and CEO said that while the Chinese crackdown is a temporary inconvenience, diversified locations of mining facilities is great news for the rest of the world. Its staff will now be moved to a variety of locations, including Canada, the US, the UAE, Iceland, and Kazakhstan. Taking a look at the markets now, Bitcoin is up almost 2%, trading at a little under 35,000 US dollars. That's as of 4 p.m. Hong Kong time. And in the top 10 for cryptocurrencies, a mixed day of trading. The top performers were Uniswap gaining 10.5% and Binance Coin up almost 6%. As the world begins to open up for travel once again, Thailand-based The Pavilions Hotels and Resorts is embracing crypto, now accepting the currency when booking rooms. In a partnership with payment platform CoinDirect, customers can choose from over 40 cryptocurrencies in payment for their bookings. The company will also be accepting crypto for those in the market to buy one of their residential villas. Their managing director for Asia says the company wasn't worried about the relatively high volatility in the crypto markets compared to fiat currencies when making that decision.
For us, we're also looking at whether we hold cryptocurrencies, and we will be making a daily decision on whether we hold those cryptocurrencies and convert them into a fiat currency or not.
Now, the company, which has properties across Asia, says responses from customers has been good so far, and that the next move could be to allow crypto to be used for other services they offer at the resorts. Now, in March, U.S. luxury hotel chain the Kessler Collection 2 said it would accept cryptocurrency, including Bitcoin, Dogecoin, and Ethereum. And finally today, in a forecast op-ed, Alvin Lee of Singapore-based D-Gate DAO takes a deep dive into how blockchain is giving rise to the next stage of human history, made up of crypto natives. That's someone who's not just a savvy cryptocurrency investor or DeFi obsessive, but someone who sees blockchain as having the potential to change the relationship between individuals and the state.
If you believe in freedom, if you believe in inclusion, you can kind of select yourself and learn yourself into the crypto nation, just like many immigrants who believe in the American dream select themselves into America by immigration. It's a similar process, except that now it's decentralized. You don't have to be physically in one place to be part of this nation, because our country is code.
Want to know more? Check out our newly refreshed website at forecast.news. You can find Alvin's op-ed there and more about what all this means for our collective future. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin again. The CoinDesk Bitcoin price XPX index is currently trading at 34,315. That's up 2.16%. And the CoinDesk Ether price ETX index at 2,322.84 cents, up 4.58%. So joining us now to discuss crypto markets is Crosstower research analyst Martin Gasper. Welcome, Martin.
Hey, thank you for having me.
Hi, Martin. I have a question about miners leaving China. You see it as potentially affecting the price of Bitcoin because the hash rate is falling. So can you map out how hash rate directly affects the price of Bitcoin, and why would it matter?
Yeah, absolutely. Well, just the Bitcoin price and the Bitcoin hash rate have been very correlated over time, except it's a strong positive correlation. So they tend to move with each other. So as we saw the last couple months, as China cracked down on mining, the hash rate has really plummeted. So in my opinion, this has made it difficult for Bitcoin to see a lot of price support. However, what we saw just in the last week or so is that now the hash rate has plateaued. So we're beginning to see some stabilization there. And as soon as this continues or even reverses, I think it's going to set up Bitcoin to have, could go way higher.
So theoretically, why would that affect prices? Like, why would we see hash rate directly cause a support or some sort of base level in the price of Bitcoin? What is the market theory behind it? Why would it matter?
Yeah, because it sort of reflects network security on a fundamental level, shows how the Bitcoin mining industry is performing. So right now, it's obviously disrupted. There is some confusion on what's going to finally happen in China. Is this ban temporary or is it permanent? And so you'll see a lot of investors take a wait and see approach because of that. And additionally, traders really look at the hash rate, due to the correlation. So, there is some opinion out there that traders and algorithmic traders especially have been causing some of this sell pressure in recent months.
as we know, hash rate is only part of the China story. The other part is that they're actually cracking down on cryptocurrency trading. We just saw another move from Beijing just recently. It didn't seem to affect the price as it has in recent weeks. What is your forecast for this going forward? I mean, these sort of moves from China, every time China does something or the Chinese government signals something, the market reacts. What is your outlook on this over the short term?
Yeah, I think over the short term, we're already seeing some of these headlines wind down. Really, late May to mid-June was really crazy. You had nonstop headlines of some sort of crackdown, whether on Bitcoin miners or crypto trading around China. So I think we're finally going to see the tail end of these headlines. And in my opinion, the market has been moving less and less as these headlines have popped up. So I think we're finally getting to the cusp of it, and hopefully the market will see that positively, given this whole migration outside of China around the world. Investors should see that positively.
Just generally, though, Martin, I mean, it's really, to be fair, been something of a bit of a dull market of late. I mean, after the fun and games of the spring, when we had huge rallies and then big sell-offs, we're now stuck in this range. Do you see it come breaking out of this anytime soon, or are we kind of got a quiet summer ahead of us?
Yeah, it's a great question. I think if the hash rate goes back up or continues to stabilize, I think it's going to set up us nicely for a potential late C. Looking at the on-chain data right now, it's pretty mixed. We're seeing network activity in terms of unique daily active addresses and active addresses. They're much lower than they were in the spring, so it's a bit weaker there. But what I'm particularly interested in is that the number of Bitcoin held by exchanges, and this has ticked up in May and June during the sell-off, but has actually stabilized in the last week or so. So if this, if it's like that or continues to trend down as it has just in the past few days, I think these are some bullish signs that could set us up nicely through the end of the summer.
All right. Well, we'll see. Thank you very much, Martin.
Thank you.
That was Martin Gasper of Cross Tower. Coming up, we're going to check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers from around the world. Together, we will tell the global story of decentralized finance. Join us for this virtual event series as we stop in Nigeria to dive into the movements that are disrupting markets and changing communities. Register today.
Welcome back. It's time to check in now with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick.
Good morning.
So what is the latest in this Binance saga?
Yeah, over the weekend, Binance, I guess we should start with Barclays Bank. Barclays Bank in the UK announced that it was suspending transactions or transfers to Binance, effective immediately, it seems. They were blocking transactions. Binance claims that this is a misunderstanding, noting that all of this seems to be stemming from a UK regulatory notice announcing that Binance Markets Limited, which is apparently a legally independent entity, is barred from conducting business in the UK. So, Binance is now kind of on the defensive, saying that, it is not the same thing as Binance Markets Limited. It is Binance.com. And basically, telling these banks, or saying that these banks are mistaken when they are starting to tamp down on transactions to the exchange.
So, Nick, do we have any indication as to whether or not these actions by the banks and the regulators that they're coordinated? I know we touched on this last week, but has anything changed at all, or are we still is it still everyone feeding off of other people but not really coordinating it?
So I haven't heard anything definitive either way. I've heard rumors that maybe FATF, the Financial Action Task Force, might be in some way involved. perhaps either, helping coordinate or at least, kind of issuing the guidance that a lot of regulators are looking at. But that's still just speculative. I haven't seen anything definitive. It could very well just be that, one regulator decided, enough was enough for whatever reason, issued a notice, and several others decided to follow through.
Nick, you've been warning for a while that ransomware is going to be one of the big factors for cryptocurrency regulation. Now we have yet another incident. How much of an impact do you think this will have?
Yeah, this one I think is definitely eye-opening. The timing hitting right before July 4th weekend cannot have been a coincidence. And ransomware attackers, this is the Revel group, is demanding, I think, $70 million in Bitcoin, and they're offering to let anyone help negotiate that payment. So it's a pretty serious attack. And we've already seen the Biden administration announce over the weekend that he's calling for an investigation and a real close look into how exactly this company is operating, or I say company, but how this group of malicious actors is operating. It comes down to what are the regulations that we might see, and it still seems like stricter enforcement of KYC might be more likely than any attempt at an outright ban in most regions. But if the crypto industry isn't part of defining what that looks like, we might see a resurgence of, for example, the Mnuchin rule, which it requires crypto exchanges and other entities to collect counterparty data for smart contracts, which might not exist. It's really going to come down to how exactly this response plays out after the investigations are conducted.
All right. Well, thank you, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Coming up tomorrow is special guest Alexander Hopner of Bitmex. Thank you, Emily Parker, our CoinDesk Managing Director of International Content. And thank you, Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm Michael Casey. I'll be back live at 3 p.m. with All About Bitcoin. And coming up at noon is The Hash. You're watching CoinDesk TV. Thank you.